Today we're setting out to uncover some hidden value, the kind that might be hiding in plain sight, really.
Yeah, looking beyond the obvious. Think about assets that are maybe overlooked, underused.
Exactly, like forgotten buildings, maybe land that's just sitting there, properties waiting for a new beginning. That's the journey we're taking you on.
And it's about this incredible transformation happening right now. Old assets getting a totally new lease on life.
Propelled by this really powerful wave of change, wouldn't you say?
Absolutely. What's really striking, and you see this in the sources, is how different forces are lining up perfectly right now.
Like what specifically?
Well, globally, you've got this huge push for sustainability, right? Plus efforts towards urban renewal, and then there's the massive surge in ESG investing.
ESG, environmental, social, and governance. We hear that a lot.
We do. And the point is, it's not just talk anymore. You've got policy, public opinion, and even financial returns all kind of converging. It's a real moment.
And Malaysia seems to be right in the thick of this convergence.
Definitely. They've set this really ambitious target net zero carbon emissions by 2050.
That's huge, and the sources are clear. The real estate sector is critical to hitting that. It's a major energy consumer.
Absolutely pivotal. And this was front and center at the recent 32nd National Real Estate Convention, NREC 2025 in KL.
Right. The theme was something like fostering innovation for a sustainable future. Bricks, blueprints, and beyond. Catchy.
It is, but it's also deep. Ahmad Sanusi Chekhab, the president of the Royal Institution of Surveyors Malaysia, he really emphasized this.
What did he say?
He said the theme goes beyond the tangible elements and speaks to the innovations, resilience, and visionary thinking that must guide our industry towards a more sustainable and inclusive future. He also mentioned policy, technology, communities, purpose.
So it's a whole mindset shift, not just about building materials.
Exactly. It's about rethinking how we build, how we live, how communities function.
Okay, so in this landscape of pretty radical change, how does a company actually, make its mark?
Well, that brings us to the company we're focusing on today, Sustainable Assets Group, or SAG.
SAG.
Yeah.
Right. And they're kind of riding this wave we talked about.
Precisely. They seem to have a system for finding these overlooked, underperforming properties and turning them into something valuable.
But not just valuable in dollars, right? Eco-conscious, too.
That's the key. Tangible, revenue-generating, but also deeply sustainable assets. It's about transformation, not just development.
Okay, let's zoom out a bit then. The macro picture in Malaysia, that net zero target is really shaking things up.
Fundamentally, it's not some distant goal. It's impacting the real estate industry right now. And some key policies are already biting.
Like the Energy Efficiency and Conservation Act, the ECA.
Exactly. That kicked in January 2025. It's basically setting new energy efficiency standards for buildings.
So older, less efficient buildings might struggle to compete.
That's the implication. It forces a shift across the whole sector. You can't just ignore energy performance anymore.
And it's not just energy, is it? What about the reporting side?
Good point. BERESE, Malaysia's new sustainability reporting requirements, are pushing for way more transparency from listed companies.
Which includes the big property players, presumably.
No, absolutely. So they have to genuinely embed ESG practices, not just, put it in a brochure.
And there was something about renewable energy, too. CORE-HES.
Yeah, the Corporate Renewable Energy Supply Scheme. That's helping companies source green electricity directly, boosting solar PV growth.
So multiple policies all pushing in the same direction.
It's a concerted effort. These aren't small tweaks. They're creating a whole new playing field.
And the numbers on solar growth reflect that, don't they?
They really do. Solar PV capacity is projected to jump from about 12% in 2025 to potentially 58% by 2050. That's a massive shift.
Wow. So for you, the investor listening, how does the money side keep up? How is this financed?
That's a crucial question. And one interesting development is this collaboration between the IFC, the International Finance Corporation, and Kagama's Berhad.
Malaysia's National Mortgage Corporation. What are they doing together?
They're working to push green building finance forward, making green housing more affordable, more accessible.
Even for lower-income groups.
And
women.
Yes, that's specifically mentioned, which shows how this links back to the S in ESG, the social impact. It's not just environmental.
That's a really important connection.
Yeah.
And are we seeing market demand respond to all this?
Definitely. Reports like Knight Frank's Real Estate Highlights confirm it. Demand for sustainable, green-certified developments is clearly rising.
And experts are echoing this.
Yes. Keith Uy from Knight Frank Malaysia basically said that with the focus on ESG, innovation, and infrastructure, Malaysia's market is set to thrive and lead regionally. Green is becoming central to competitiveness.
So it's cascading through the sector, as one CEO put it.
That was Pravindran Singh from Zarin Properties. He used that exact word, cascading. Driven by tenants, investors, financiers, everyone demanding it now.
And he pointed to specific sectors leading the charge.
Yeah, commercial, healthcare, and especially industrial and logistics. That's where you see a lot of the early momentum.
Which brings us to a really practical point for anyone owning or developing property. Does going green actually pay off?
There's clear evidence now. Unkumod Iskandar from CBRE WTW stated that green certifications are directly linked to higher rents and better occupancy rates.
So it's not just a nice-to-have premium anymore.
It seems we're moving towards a potential brown discount for properties that don't meet these standards. It's fundamentally changing how risk and value are assessed in real estate.
Wow, a brown discount. That's a powerful incentive.
It is. And Samuel Tan from Olive Tree Property Consultants summed it up by saying ESG will become the norm, not just some marketing gimmick.
Integrated right from the start. Acquisition through management.
That's his view, a fundamental, permanent shift in how the industry works.
Okay, this sets the stage perfectly for understanding SAG. Against this backdrop, what makes their approach stand out?
Well, their core mission is quite unique. They actively seek out these unutilized or underperforming assets. Could be empty offices, struggling hotels, just land.
Stuff others might write off.
Exactly. And they transform them into high-performing but crucially eco-conscious spaces. They're seeing potential where others might just see problems.
And their business model is key to this. It's more than just buy and sell.
Oh, much more. It's a whole cycle. They start by repurposing what's already there. Then they add significant green value, sustainable upgrades, tech integration.
Okay, repurpose, green value add. What else?
Then they actively manage the properties themselves. And that allows them to generate yield in multiple ways.
How so?
Through property sales eventually, but also ongoing rental income, management fees from operations, and capital gains as the asset value increases. It's diversified.
And managing it themselves is a big differentiator, isn't it? It gives them control.
Crucial control. Over performance, over the environmental impact. It helps de-risk the whole proposition, you know? They're not just developers, they're operators too.
Reimagining spaces, as you said, with a sustainable purpose.
And this fits perfectly with the idea of a circular economy in real estate. SAG seems to be an early mover here, aligning with global standards and regulations.
Let's clarify that circular economy in real estate. What does that actually look like?
Think of it as being smarter, not just building new all the time. Instead of demolishing an old building and landfilling everything.
Which is incredibly wasteful.
Hugely. The circular approach involves salvaging materials for reuse, maybe repurposing the building's core structure for new use, and designing any new parts so they can be recycled or adapted later.
Minimizing waste, maximizing lifespan, creating adaptable buildings.
Exactly. Structures that keep delivering value environmentally and functionally.
And SAG takes this further by integrating smart city tech.
Yes, this is where it gets really interesting. They blend those green building principles with cutting-edge smart technologies.
So it's not just about being energy efficient.
No, it's about creating better living and working environments, fostering connectivity, enriching lifestyles, raising community standards.
Can you give an example?
Imagine walking into a building that used to be, say, a bit rundown. Now it has intelligent climate control that adapts. Maybe systems turning waste into energy on site, smart services integrated seamlessly. It enhances the whole experience.
And this creates value for everyone involved.
That's the goal. For investors like you, it means enhanced property value, solid returns from future-proof assets.
Okay. And for the planet.
Clear environmental benefits, energy efficiency, waste reduction, renewable energy use, supports that stewardship goal.
And the community itself.
They get vibrant, resilient spaces, smart infrastructure designed to adapt, better places to live, work, connect.
That sounds ambitious. Who's leading this charge at SAG?
They seem to have a strong team. The CEO, William Du, has a background in asset management and specifically green finance.
That makes sense. Who else?
Jason Cho is the COO of property development. He brings over 25 years in real estate, construction, banking, really broad experience.
Okay.
And then there's Sandeep Grohl, the COO of hospitality management. He has over 2 decades in hospitality innovation.
And he's known for something called results as a service. What's that about?
It means focusing relentlessly on tangible outcomes. Things like boosting revenue, improving guest satisfaction scores, making operations super efficient.
Rather than just standard management practices.
Exactly. It's performance-driven. The payment structure might even be tied to hitting specific targets. It really aligns incentives. A bit of a game changer in hospitality, potentially.
Interesting. Okay, strong team, clear vision. What about proof? Are they actually doing this?
Yeah.
Let's talk market traction, the pipeline.
Right. This isn't just theoretical. They have actual projects underway, which shows momentum and helps de-risk things for investors.
Like their industrial projects.
Yes, good example. They have the Klabang Industrial Park in Ipoh. That's 23 acres, aiming for a GDV gross development value of around RM 450 million.
And it's focused on high-tech and SMEs.
That's the plan. State-of-the-art facilities. Then there's another big one in Kotatingi, Johor. 39 acres, potential GDV up to RM 500 million. Also focused on high-tech and SME industrial uses.
And the timelines.
Both are projected for completion around Q1 2028. They're currently in the crucial JV and feasibility study stage for these.
And these industrial parks fit into Malaysia's bigger economic picture, right?
Perfectly. You've got Selangor pushing advanced manufacturing, Johor focusing on high-value industries. These parks directly support the National Industrial Plan, NIMP 2030.
And you mentioned helping exporters with EU carbon taxes.
Yeah. By providing greener, more efficient facilities, it can potentially help Malaysian companies meet those tightening international standards. It's about future-proofing local industry, too.
Okay, so industrial is one area. What else is in the pipeline?
A really ambitious smart tourism city development on Marina Island, Perak.
Smart tourism city. That sounds big.
It is, up to 150 acres with a potential GDV in the RM 3-5 billion range. It's planned as a whole ecosystem.
What does that include?
Resorts, hotels, but also assisted living and nursing care facilities, commercial centers, even a marine and wellness college.
Wow. A very integrated approach. When would that happen?
Phase 1 completion is targeted for 2028, but the whole development could span 2025 to 2035. It's also in that JV and feasibility stage right now.
That assisted living and wellness component is interesting, especially considering Malaysia's medical tourism growth.
Absolutely. The numbers are significant. 1.3 million healthcare tourists in 2024. Lots coming from nearby countries like Indonesia, Singapore, China.
So tapping into that wellness and aged care market within a tourism hub makes a lot of sense.
It seems strategically smart, yeah. They also have a commercial project, Laguna Heights, in Johor Bahru.
What's the scale there?
Smaller, 1.6 acres, GDV up to RM 120 million. Planned for retail, shop lots, plus a kindergarten and daycare. Completion targeted for Q4 2027, also in JV and feasibility.
So industrial, tourism, commercial, a diverse portfolio.
And alongside these new builds, they're also actively looking at revitalizing existing underperforming hotels.
Fixing up older properties instead of building new.
Exactly, through strategic repositioning, improving operations, upgrading facilities, maybe rebranding. It unlocks value in assets that are already there but just need a new lease on life.
And the key thing here is that this model, this approach, it's scalable, right?
That's the crucial part. Their circular redevelopment model isn't just for one-off projects. It's designed as a blueprint they can replicate.
So what they figure out in one place?
They can apply to other legacy sites, especially in urban areas needing renewal.
Which ties back to those discussions about urban renewal in Malaysia, like the proposed Urban Renewal Act we mentioned earlier.
Precisely. SAG seems positioned to offer practical solutions for that exact challenge. They're not just following trends, they're potentially providing the blueprint for revitalization.
Okay, so bringing this all together for you, the investor, what's the actual opportunity here? SAG is raising capital.
Yes, they're seeking seed capital right now, up to RM 3 million.
And how is that structured?
Through ordinary shares or redeemable convertible preference shares, RCPS.
Okay, and the valuation?
They've set it at RM 10 million post-money, offering up to 30% equity for these seed investors.
What about the RCPS? What are the terms there?
They look quite attractive. A 10% cash coupon per year, an option to redeem them after 5 years, and they convert to equity if there's a liquidity event, like an IPO or sale.
And what kind of return are they aiming for?
They're targeting a 20% internal rate of return, IRR, over 5 years. And importantly, this isn't just financial. They're tying returns to measurable sustainability KPIs for each project.
So you get financial performance alongside demonstrable impact. That's compelling. Let's summarize why an investor might consider SAG.
Okay. First, you're investing in a high-growth market. Global demand for sustainable real estate and ESG investments is undeniable.
Right. Second.
Significant asset upside. SAG's model focuses on revitalizing undervalued assets, which inherently offers potential for strong returns.
Makes sense. Third.
It's impact-driven. Your investment directly contributes to measurable environmental good, like carbon savings and social benefits, like job creation and community renewal.
Okay, fourth point.
The portfolio is future-ready. It aligns with net zero goals, green certifications are becoming essential, and it taps into next-gen trends in hospitality and industry.
And finally,
The team. You're backing experienced professionals with proven track records in sustainable development, finance, and operations.
and they have clear ideas about how investors might eventually exit.
Yes, they've mentioned potential routes like an IPO or a trade sale, and they're estimating a potential 10x to 20x return for seed investors. Ambitious, but it shows the scale of their vision.
So Sustainable Assets Group really does seem to offer a unique chance to invest in real, measurable impact, while also capitalizing on a major shift in global investment.
It's about seeing value where others don't, really.
Which leads to a thought for you listening. What could you transform if you looked beyond the obvious? If you saw the hidden potential in overlooked assets around you?
For professional investors and high net worth individuals interested in learning more about SAG specifically, we encourage you to dig deeper.
How can they do that?
You can find the detailed pitch deck via the links in the description of this deep dive, or for a direct chat, you can book a call through WhatsApp. The number is +6017 3188 978.
And of course, the important reminder, investing involves risk. Always do your own due diligence, consult your financial advisor, and ensure you meet the necessary qualifications, like those under CMSA 2007 in Malaysia.
Thank you for joining us on this deep dive into sustainable assets and the opportunities they present.
Catch you next time.